Hello, and welcome to Smaulgld. In case you missed it, top gold and silver stories for the week ended June 25th, 2016. Just a quick note for Smaulgld subscribers that we've been producing a lot more content than one blog post a day, so we haven't been emailing you all of the blog posts as they come out. We're trying to keep the emails to no more than one a day. So if you want to catch up, you'll have to come to the website every day and check out the stories, or you can catch up at the end of the week because we reproduce the stories on this blog post and on this weekly podcast. If you're not a Smaulgld subscriber, you can do so by going to smaulgld.com and filling just your simple email address in the box, and you will be notified probably once a day or once every couple of days of new, what we deem to be the more important blog posts. That doesn't mean the ones that we don't send you aren't important. It's just we don't want to keep sending a lot of emails. We haven't gotten any complaints about it, and I just want to make sure before we did get any complaints and you start getting 3 or 4 emails a day that you realize what we're doing. So please subscribe, and if you are a subscriber, please check back daily if you don't get an email on that particular day. Okay, well, this podcast is going to deal with the week as we normally do, and we'll go through all the stories that came up that were important on the economy, some interesting gold coin finds that happened during the week in Europe, and also we'll mostly focus though on Brexit, the lead up to Brexit, the impact of Brexit, and some analysis on where I see this whole thing going. First, let's just quickly look at the gold silver price action. Gold was up about 15 bucks during the week, but of course that doesn't tell the full story. Gold closed last week at 12.98 and closed this week at 13.15. Silver closed last week at 17.47 and ended the week at 17.72. So it looks like there was some small gains in the gold and silver markets during the week, but those prices really mask the fact that gold and silver had dropped during the week a lot on the anticipation that the Brexit vote would go to the Remain camp, and when it went to the Leave camp, the prices quickly reversed, erased their gains, and headed higher. Gold silver ratio is about 74-1. Not much of a change from last week. You can take a look at the chart. We're about the same as we were year over year at about 74-75-1. Earlier in the year, we had touched about 84-85-1, as you can see here. But that number seems to be going down, but gold and silver are now rising and falling at about the same pace for the past month or so. So we've maintained that gold silver ratio of 74-75-1. Chart of the week has to be the dramatic rise in gold on Thursday night as it became clear that Brexit was in the lead. The Leave camp was going to win. The gold price started to rise, and it actually shot up over $100, $103 at one point late Thursday night, rising from about $12.50 all the way up to about $3.50, $3.57. And then the price fell back, but held its gains, and we'll talk about later this kind of unique issue where the price stabilized within a very small dollar range almost all day on Friday. Okay, let's talk about the stories that we covered and followed starting at the beginning of the week. At the beginning of the week, we put out a podcast, 4 reasons COMEX won't default. We won't go through those reasons right now. We can check out the blog post. You can check out the podcast right here. Interesting that there is a lot of talk and there's a lot of strange movements going on in COMEX right now. And some commentators are starting to say that this is going to be a time when the traders stand for delivery. There won't be any gold or silver there. I think it's gold that they're talking about. And COMEX will have to default. We debunk that story as much as we believe that it is a untenable situation. We don't believe that the COMEX will default. And if you can check out the blog post and the podcast, you'll see why. Okay, so the week opened up with Brexit being the focus and remained the focus to the end of the week. But all week, there were stories about the pound rising because there were reduced Brexit fears. A lot of the recent polls were showing that Brexit was not going to happen and that the Remain camp would win, and there was a tremendous amount of media propaganda talking to people about why it would be a disaster if the Britons voted to leave the UK, and it just looked like, and even Nigel Farage on the eve of the vote, who's the head of UKIP, in charge of unofficially of the Leave campaign, he even thought that the Remain camp would pull it out. So during that week, the pound was rising, and there was a lot of complacency that it would end up a Remain vote. But over in Italy, the five-star movement's Virginia Raggi, she won Rome's position as mayor, and the five-star movement is kind of a Eurosceptic, somewhat left-wing party, and they're very populist. So they've only been around a few years, and in the elections, they won 19 out of the 20 mayor votes in towns and cities across Italy, which is quite significant. And again, they are a Eurosceptic type party. Gold, as the British pound was rising during the week, was down. And there were stories, and I haven't linked to them all here, but I just have a couple of them, that gold was down on easing. Gold was down on waning Brexit fears. Gold was down on receding Brexit fears. Gold was falling. Gold was dropping, gold was declining, gold was ebbing, gold was fading on Brexit fears. Those are some of the headlines. Gold falls as Brexit fears ease. Wall Street Journal said gold falls as Brexit fears wane. Market Watch, gold falls as Brexit fears recede. Well, as we see, yes, the gold did fall as those fears receded, waned, eased, and so on. But then gold also rose, skyrocketed, soared, etc. when it turned out that the Leave camp was going to win. We produced we get it almost the minute that the Russian central bank publishes their monthly reserve position. We publish also their reserve position and their monthly gold editions, and Russia added about 100, not about, but they added 100,000 ounces of gold to the reserves. Now, this is the lowest amount that they had added to reserves since last May, 100,000 ounces. Don't know if this is a trend, but it ties into China in May also adding no gold to its reserve. China meaning the People's Bank of China. So there was a bit of a decline there in Russia, but again, it was the same as they had last month, and you can see in June 2015 they added 800,000. So we'll have to see what happens in June, and we'll report on that as soon as that number hits the wires from the Russian central bank. We noted that the Wall Street Journal had an article specifically highlighting tremendous sales out of the Perth Mint. We just noted that and republished, not the article, but kind of what the Wall Street Journal was talking about, and embellished some of the statistics about the Perth Mint and compared them to the United States Mint. So you can check out that blog post. John Rubino over at The Dollar Collapse was kind enough to republish that story that we covered over on his blog. And quickly you can see the Wall Street Journal is onto something, because when the Perth Mint introduced the silver kangaroo coin, the silver sales basically went up about tenfold the month that they introduced that coin, selling 3.5 million of these nice looking silver 1 ounce bullion coins. And ever since the introduction of this silver kangaroo by the Perth Mint, they've sold over 1 million ounces every month, except in May, where they almost sold 1 million ounces. So it's worth checking out. We also covered some stories about gold panning contests in Australia. You can click on the link there. It will gold pan out. Interesting story about an old mining town that still holds a gold panning contest. India's gold monetization scheme, still in the news. It's kind of a foolish scheme where the Indian government is trying to get its people to turn their gold in and get interest-bearing bonds in rupees. It has been an utter flop. And so amongst the people, the Indian people see no reason to turn their gold in. They get some piece of paper that says they're going to get a few rupees in exchange and interest. But some of the temples have decided they can kind of extract some money from the government by loaning them their gold. And there was a story about one of the temples looking to monetize their gold. And what they're doing is they're going back to the temples, they're going back to the government saying, no, your original offer is not that good. We want to make sure we get our gold back at a certain time, and we want shorter term loans than the ones that you've offered us. Interesting story. Trump supporters tend to be gold bugs. Click on that and you can read about that. As you know, we every day we update on Twitter, and then we reproduce here in the weekly report the U.S. Mint sales update. And we're not going to go through them line by line, but one thing to know is that to date, American Silver Eagles are less than 2 million, meaning that the total sales of American Silver Eagles through June will be about half of what they've been every month all year. And that's basically because the U.S. Mint had overstocked its authorized purchasers by allowing them or rationing to them just 1 million Silver Eagles a week. And the authorized purchasers realized if they were on ration, they might as well take as much as they can. And so they've sold out every week all year, the million ounces, and sold over 4 million ounces a month as a result. But now, from reports from bullion dealers, a lot of them have overstocked themselves and they are not necessarily in the market to buy more. So the sales this month are down. Now, that may change now that there's been a Brexit. We know that we've had reports of massive increases in gold in Europe and in UK and also in the United States. It's a little too early to tell what impact it's had on retail silver buying, but I would guess that there should be some boost or spike in silver eagle sales, and if that's the case, then we'll see those inventories quickly run down that are held by the authorized purchasers and the inventory held by retail dealers. Yellen actually spoke. People, it's kind of lost in the news this week because of Brexit, but she appeared in front of the Senate Banking Committee and basically said nothing about, she was hesitant to raise rates due to the slowing job market and Brexit and who knows what else she said. I couldn't spend much time listening to her. But what I did spend time listening to was the aftermath of her talk, where media talking heads and one particular senator had some very choice words for Miss Yellen, saying she didn't know what she was doing, that all this talk back and forth, we're going to raise rates, we're not going to raise rates, has basically led him to the conclusion, the chairman of the Senate Banking Committee, that the Fed is losing credibility. And the broadcaster agreed with him. And then later, St. Louis president James Bullard said basically the same thing. He said, all this back and forth that we do about raising rates, not raising rates, makes us lose credibility. And then he said, we probably only need one interest rate hike over the next year and a half, maybe 2 years. And that goes totally against this nonsense that the Fed's been talking about. They're going to raise rates gradually. At the beginning of this year, they said there were going to be 4 rate hikes. Then it looked like they were only going to do 2. And then in May, the Fed yak attack happened, and all the 8 or 9 Fed presidents were saying, oh, no, rate hikes are on the table. We're going to do 2 or 3 this year. And now it's to the point where Yellen is saying it's not impossible that we'll do 1 rate hike in July, but it doesn't look like rate hikes are on the table anymore now due to Brexit, because the dollar is now stronger, the U.S. economy is weaker, and now we're at the point where if the dollar gets too strong, we might be in a position where the Fed now has to not necessarily lower rates, has to start talking about them. So we may start seeing, if the dollar moves higher, some type of Fed yak attack about the possibility of lowering interest rates and the possibility of lower rates being on the table and the possibility that September or July is a live meeting where we might consider lowering rates. We'll see, but the whole dynamic has changed because of Brexit and because there's uncertainty. The Fed is not going to be talking about raising rates unless something dramatically changes. And if nothing dramatically changes and the dollar continues to rise, you'll probably be hearing about rate cuts. We put out a story for those of you who are language buffs, AU, that's my claim. And we went through a lot of the 19th century mining lingo, the lingo that was exchanged amongst the guys that were seeking their fortunes out in San Francisco and out west in the United States, and the language that they use. That's still with us today. There's about 10 different mining phrases in that blog post. We still say things like, that didn't pan out, or I'm going to go stake my claim, or I hit pay dirt. Those are all terms that originated in the mining camps in the mid-19th century, and that language is still with us today. So if you want to check out that article, it's called AU, That's my claim. Gold continued to be the price continued to fall during the week, but the physical demand for gold continued to rise because people still believe that Brexit was a possibility, and those people were rewarded. They purchased gold, physical bullion. The bullion shops were packed during the week, especially in Europe, and there were articles in the Telegraph UK and other UK newspapers talking about how people were stuffing gold bars in safes at home, under mattresses, and so on. In the meantime, though, India's gold imports have been falling. We mentioned earlier how, excuse me, Russia's gold acquisitions were very low. Russia's central bank gold acquisitions were low in May. We mentioned how the People's Bank of China's central bank, bought no gold in May. And imports of gold in India are basically half, maybe 60% off of last year. Now, that's not because there's a lack of demand. There's some of that. But it's mostly because of Indian government imports and the whole government's anti-gold campaign, which we talked about, the gold monetization scheme, the increase in gold import duties, and then also a gold sales tax. And that's really kind of pushed the gold demand in India down. But you do see a change in dynamic here. You've got the West now catching gold fever at a time where the East looks to be like they've bought a lot of gold in the run up to this gold fever, in the run up to Brexit. They bought a lot of gold, record amounts in 2015. The Shanghai Gold Exchange had a record year. Russia added a record amount. The People's Bank of China probably added a record amount, but we don't have all the data there. And India's gold imports are very high. This year, that's kind of reversed. I wouldn't say the gold is flowing now east to west, but the West seems to be the one that's buying, the region that's buying the gold, and not the East. And in fact, you've had Soros, Druckenmiller, Singer, all these top fund managers buying gold in the form of at least ETFs. So there is a rush to gold in the West, and there seems to be a bit of a slack now in the East. Now, the British pound, as we mentioned, kept rising and rising all week on ebbing, waning fears of Brexit. And I just remarked that, so what? Now, the British pound was getting close to its all-time high for the year. And on the basis that maybe nothing was going to happen, the British government, the British pound is still part of an economy that's stagnant and is part of the EU. So there's really no reason for the British pound to have risen other than some type of hedge bet or relief rally. But the pound strength was totally unwarranted on the basis that nothing was going to happen. Well, if nothing was going to happen, it shouldn't have risen to its highest level. It should have just gone back to where it had gone before it started to fall. U.S. Mint sales update, you can go through those, the daily figures. And then we'll start to cover, this is getting into the day just before the vote. The markets and the polls are diverging. Now, the polls were saying that it was close, but the betting was saying that Remain was going to win easily. Now, that's because the way the betting odds are created is based not on the number of bets that are made, and there were far more Leave bets made than Remain bets, but the money behind the Remain bets was far higher than the money behind the Leave bets. So it looked like the odds were, because more money was thrown at Remain, that the odds were that Remain would stay. And I would suggest that there's probably a little manipulation going on there to make it look like Remain was going to stay, to try to convince people that Remain was the way to go, because there was probably a lot of bets made, just kind of throwaway bets, just to add some money to the Remain side. I have no evidence of that, but it seems that all of the powers in charge, from the media to both parties in the UK to the IMF to the Fed, they're all against the Leave vote, and it seemed they would do anything in their power to try to make the vote come out in the Remain way. Having said that, though, fund managers, there were reports were stocking up on cash. There were lines of people not just buying gold in Britain. I think even more people, Brits, were buying foreign currencies. They were probably loading up on euros, whatever they can get their hands on, worried about all the fear mongering that was going on about the pound, that was going to happen to the pound. One thing that probably helped the leave vote was the Prime Minister of England had said that Turkey would not join the EU until like 2230 or some ridiculous number, meaning it wasn't going to happen. And then a report came out said that the EU was going to revisit the Turkish application basically on Friday, the day after the Brexit vote, or someday very soon after the Brexit vote. And that was probably the EU being a little confident in the vote, thinking, well, Remain was going to stay and it would be business as usual. And now, Turkish, let's take up the Turkish application to the EU. Well, I don't know if that's going to happen or not, but that probably tips some of the voters towards the Leave camp. One thing that most people missed, I did tweet this on Twitter, was that Google had predicted a Brexit. And the way they had predicted it, it got no news coverage, very little news coverage. I hadn't seen any of the major outlets. I'm surprised Google even allowed themselves to publish this because they were probably totally against the Brexit. But it showed, based on search results, people looking for leave information, people looking for Remain information, that across the country, it was basically the number of searches looking for leave was much higher than those looking for Remain. And on that basis, they made a prediction that it was almost looking like a Brexit landslide. Now, it wasn't a landslide, but it highlights Google's power to predict things based on search results, because all the other polls showed at that the day before that it was going to be Remain. And Google had done this research. This was earlier on. This wasn't the eve of, but they had done this search research the week before, and it showed that people were more interested in Brexit. We've also started to cover some human interest stories on gold, and one of them that we covered was, and many people in the United States are not aware of it, there was a massive dam break in Brazil last fall, and I think it was an iron mine, and it just devastated the valley below with a flood and sending toxic mud into the town. And 17, 18, 20 people were killed, many were missing. But this happened in a former gold mining region, which a lot of people may not be aware of, that back in the 1700s, this area was swarming. This was bigger than the San Francisco gold rush. In fact, there was a town there, I can't recall the name, but you can see it at the link here. You can look it up. There was a town there that became in 1750 the largest town in the Western world, bigger than New York, Philadelphia, any of the towns at the time, cities at the time, because of the amount of gold that the Portuguese were extracting out of this region. But in any event, this flood kind of dredged up the river there, and some of the old gold started to come to the surface. And a lot of the people in that town and in that region have just taken to grabbing their pans or small mining equipment, and they're managing to eke out a living based on getting this gold out of the river and the area around the river. And the blog post gives you some interesting historical information about this area. Here is a church of which half a ton of gold was used to decorate the inside, and you can still see that church there today. And I think something like 400 or 500 tons of gold were shipped back to Portugal from this region. So this is a very heavily laden gold area that some of that gold has been dredged up again because of this tragedy, and the people of this area are trying to salvage whatever gold they can find there. We had news, and I think this is the sign of a top in the U.S. equity markets, notwithstanding the crash we had early on Friday because of Brexit. But on Wednesday, Solar City and Tesla, two companies not controlled by but run by Elon Musk, is the CEO of Tesla. He's got a 20% interest in Solar City. Both of these entities are heavily government subsidized. Both of these companies make tremendous losses, but they're darlings, and they have high market caps, notwithstanding the fact that they don't make any money, even though they have heavy government subsidies. Well, they decided they're going to merge. These two unicorns are going to merge. And I don't know what the advantage of a car company merging with a solar power company is. Supposed synergies, I think I called it -2 plus -2 equals +5. The new math, two unicorns are better than one. This is just a sign to try to me, that the stock valuations are so stretched They can't do anything else. They can't buy back more shares. They can't pump up the stock anymore. So they just merge two of these money losing companies and see what happens. I don't think it's going to go anywhere. And I think clearly now the U.S. stock market is headed down. And I say that marked the top, and maybe it did. What else have we got this week? Silver imports into India, not as bad as gold imports, because the government isn't actively working against silver imports. And when gold is unavailable, Indians don't necessarily view gold as silver the way Americans do, as it's cheap substitute. It's totally different. Gold is revered. Gold is the metal. It's not like silver is a substitute. They like silver, but for different reasons. But it doesn't hold the same allure as gold. But silver imports have increased after a very poor February. And you could check out all the historical information about silver imports in India. They were very big last year, silver imports into India. In fact, we calculated that silver imports into India were about 300 million ounces, which is about a third or more of global, or maybe it's less than that, of about 250 million ounces. You could check at the blog post of the total global silver mining production. So last year, India was just eating up a lot of silver, as were a lot of the silver coin producers like the U.S. Mint, Canadian Mint, Austrian Mint, and Perth Mint, as we mentioned above. Fed was getting ready the day before Brexit. You had Fed Governor Jerome Powell saying the Fed is ready for any Brexit fallout. You had all these types of chest-pounding pronouncements from all the central banks. After they tell you what a disaster it's going to be, but then they tell you how they're ready to take care of whatever disaster comes their way. U.S. economic data, existing home sales rose very quickly, but you'll also see later the new home sales did not. So while existing home sales are finally started to catch a little bit of a bid, they're still far below where they were in 2005, 4, 6, but they're doing a little bit better. But new home sales are definitely not going anywhere. Again, we had another U.S. Mint sales update. And then on June 23rd was the day of the Brexit vote. As you can see here at this point, Betfair odds at 86% probability of the UK voting to remain in the EU. And the British pound hit its high of the year. So there was a lot of expectation amongst those in power that this little revolution was going to be smacked down like a fly and things were going to carry on and there would be no Brexit. And I had said, if the Brexit vote had gone to remain, you would immediately start seeing the Fed presidents out there yakking about a rate hike coming up again. But I think now that you've got Brexit, that's not going to happen. One thing that was noted, and I kind of characterized this in as part of my prediction. I predicted that there would be a Brexit on the day of, and I actually called it 2 hours before the mainstream media did. It was raining across Britain, and my quick take on that is the people that wanted out of England were far more passionate about getting out than the people that just wanted to stay. If you think about it, staying requires no inertia. You just stay, you sit in your seat. Well, if it's raining, you remain at home. You don't go out. And that's apparently what happened. So I had mentioned that Remain vote will remain at home in the rain, and perhaps many of them did. There was a lot of talk, though, about, and there still is, that if the Leave vote went through, that the pound would take a beating. Now, I understand that, and that's a lot of that is psychology because there's uncertainty about the pound, but nobody seems to be talking about what is the impact on the euro. Because my point is that looks like England will always be England. They'll always be in England. There'll be a pound. But that the real worry is what's going to happen to Europe and the EU if another country leaves and another country leaves. That's got to undermine the euro. People have to start thinking, well, what does the euro look like without France, or without Italy, or without Spain, without all of them? So I'm just a little confused that all the attention is on the pound, but I'm really not confused because it's basically the mainstream media trying to create this scare campaign against the pound while pretending that somehow the euro is immune from any uncertainty when the certainty's gone out of the pound. It's the pound now. It's there. It's going to be out of the EU. What's to be uncertain? What's uncertain about the EU is what's going to happen to the euro. What countries are going to remain in the euro? We don't know. We did a story on gold finds in Ireland. You'll find that very interesting if you click on that link. There's gold being found not just in the northern part of Ireland, but also on the west coast and the center of Ireland. And there's a lot of activity involved, innovation in getting the gold out of the ground, out of the streams, and so on in Ireland. We did a story on another one of these human interest stories on gold in Uganda. Excuse me. They found gold just, I think, in 2012. A lot of it in a particular area. You go to the blog post, you can see the map. We've identified where that gold was found. But what's happening there is, and I think the average person there makes $3 a day, some ridiculously small amount of money. And what's happening is that there's tens of thousands of people showing up in the region to stake their claims and to try to make money. And there's the whole cottage industry around gold mining. You've got restaurants, water sellers, prostitutes, a whole mix of people just coming to the area, gold dealers, grinders, people that are engaged in refining gold, selling, and so on. Well, what's happening is the area is also losing, or its schools are losing its kids who are lured by, and I'm sure their parents probably think it's okay, some of them, that they go and work because they bring home more money working in some of these, either in the direct gold mining industry or in the cottage industries. And you could check that story out. It's an interesting human interest story of what's happening to the children of Uganda that live in and around this gold boom mining area. Well, the Brexit vote finally came out on the 23rd, and Brexit ruled Britannia, and immediately gold and silver shot up, as you can see here on this chart. Silver, like gold, spiked on the Brexit. As I mentioned earlier, I called it, and the way I called it was when I was looking at the map of England and Britain and Scotland and Wales and Northern Ireland. And after Scotland voted, and Scotland voted 65-70% as a nation to stay, but their votes came in early. And after their votes had been counted, other than Edinburgh, which voted 75% to remain in Europe, the leave vote was still ahead. And from that, I realized there's no way now that the areas that have already voted, that have voted overwhelmingly to remain, there's no way that the remaining areas, no pun intended, that the areas that hadn't reported yet would be able to make up the deficit, because if they hadn't made it up with Scotland, which had already reported, there was no way that the other areas would be able to turn in votes enough. Now, the interesting dynamic was Scotland voted to remain overwhelmingly, Northern Ireland, and in London, not just the city of London, but the entire London borough, which encompasses 25% of the whole UK's population. But everywhere else, anywhere outside of cities, the leave vote took the day. So there's a bit of a split. The split has gone two ways. People that live in London, people that live in the Scottish and Northern Ireland areas, they wanted to remain. Everyone else wanted to leave. And then there was a breakdown with demographics. The younger people wanted to remain, and the older people wanted to leave. So there's probably an argument against having a voting age at 18. You should probably raise that to 30, because a lot of the young people complained that somehow Europe was being taken from them, which really doesn't make a stitch of sense, because they're not losing Europe. They're losing a government of Europe that really basically gives them nothing. It's not like they can't go to Europe. It's not like they can't call themselves European. I just think they don't understand the implications of the regulations and the government of being governed by Brussels and not having your own say. I don't see where they think that being part of, it's not that they're not part of Europe. They're just not part of the government, the governing body, the bureaucracy of Europe. I don't think they make the distinction. I think they've been taught in school that somehow the European Union has saved them from wars. A lot of the young people think that not being in the European Union means they're no longer European, but it really doesn't mean that at all. It just means they're not part of the government of Europe. And I think that they haven't made that distinction. They've been taught in school that the European Union has kept them out of war, that the European Union is inclusive. And of course, a lot of young people are always concerned that they're not diverse, that they're not inclusive, and that somehow running your own country goes against those principles of being uninclusive, as being racist, and so on. And that's the reason that they want to remain in Europe, because they don't want to be part of this isolationist, racist movement where they're not part of Europe, they're not part of the inclusive nature of Europe. And really, the European Union has nothing to do with those thoughts or values. The European Union is just a big government, and that's the reason, a government that takes from the British people, a government that tells the British people what to do, that doesn't give them an option to have a say in a lot of the rules and regulations that govern their lives. But again, the younger people somehow don't seem to understand that. They just view that they're being pushed back into this anachronism of a country called England, and they view themselves as European, and they still can view themselves as European, but you don't need an EU to do that. But they apparently have been taught that that's what you need, and that's kind of what they want. Okay, so as I mentioned, we called it for Brexit. There was other economic data during the day that came out in the US. Jobless claims, which I don't pay particularly much attention to. They say they're at a 43-year low. So what? When there's fewer people in the labor force, you're going to have fewer people leaving it. Also, 43 years ago was not the high point of any labor market boom. You're talking about the mid to late 70s, when the labor market was not doing well either. Actually, the earmark of that labor market was similar to the one now. The labor participation rate was down. Okay, when you have fewer people working, you have fewer people leaving the labor market. That is not a sign of labor market strength, but yet the media cheerleaders and Reuters and AP and Dow Jones, they always talk about this as being a sign of a strengthening labor market and why the unemployment rate is below 5%. Okay, if all that's true, go ahead and raise rates, but it's not going to happen. Not at this point. In any event, we mentioned the new home sales. They rose last month, but then in April, but then in May they fell back down. But as you can see here, they're talking about a housing recovery. Even with the increase, they're still at levels last seen in the 60s, 70s, and 80s. So new home sales are flat. And that's really where that helps the economy far more. Even though new home sales are about 10% of overall sales, that's where the real impact on the economy is, because you actually have people working, producing new homes, not just people moving in and out of old used homes. You have people building them, you have people manufacturing goods for them. It's a totally different dynamic. It's a much more positive impact on the economy to have rising new home sales than just people moving in and out of ever more expensive used homes. But they made a big deal out of the existing home sales as somehow a sign that not only do we have this tremendous labor market, but we've got this booming housing market. Neither is true. Deutsche Bank supposedly said they were going to fire 3,000 workers, close 188 branches. I read somewhere else where they denied that report. I'll have to follow up on that and report back next week. There were also reports that some of the big banks saying they were going to move out of London. That's been unconfirmed as well. We'll see. So what I want to quickly mention is, as we saw, when it looked like Brexit definitely was going to happen, gold shot up, and it would look like it was just going to, it went up $100, and it looked like it was going to keep going up, and then it kind of fell back, which makes sense. It can't go straight line. But during the day, when the market opened, as you see on the the chart here, it kind of stabilized between 1,310, 1,315, $1,317 an ounce all day. Now you would think, with the volatility that we had in all the markets, that gold would not be the most stable asset during the day. It's stable in that it's worth more now than it was yesterday. But this smacks of kind of intervention to kind of put a cap on the gold price. Someone mentioned I should have put the line at the top rather at the bottom, but I was just trying to highlight that this was a steady price action, eerily steady price action for gold on a day where there was a lot of volatility. And the silver was the same thing. Look at that. Silver is a real volatile metal. Look at that. You got it from 1770 to 1775, 1772 all day, from the beginning of trading to the close of trading. Now, I'm not complaining it went up, but it had gone up to $18.20, and then it kind of just stayed in the 1770 range all day. Aftermath of Brexit, and we'll wrap this up. Netherlands, France, and Italy want their own referendum. There's a separatist movement in Spain and Catalonia. Ireland now wants a united Ireland referendum. The Scottish First Minister, she was saying that she wants a referendum because they feel that they were pulled out of Europe against their will. Now, these are the same people that are always droning on about democracy and how it works and we have to bring it to the rest of the world. But when they get a vote that goes against them, it's against their will. Well, newsflash on democracy, it always works that way. When you're in the camp that loses the majority vote and you're in the negative vote, by definition, the majority is telling you what to do. For example, people that didn't vote for Obama, they were forced to accept Obama. That's how democracy works. People who didn't vote for Richard Nixon in 1968 were forced to take him, even though they didn't want him. That's any vote. It works that way. And that highlights, but they're not saying it's a flaw in democracy. They're just saying that this is wrong and we won't accept this. We won't be told what to do by the majority. But clearly, they'd have no trouble saying democracy works. The voters had spoken had the vote turned out their way. So it's interesting to see this because you've got people across England now. They want to recall the vote. They want to have a do-over. And it really highlights a lack of understanding of either democracy, constitutional republics. It just basically means they're in favor of outcome-based politics, that they want what they want. And if democracy doesn't get it for them, they'll take it another way. And that's basically what you see in politics all the time. Most people have very little understanding of how governments work, how governments don't work. All they want is what they want. And if someone can provide it to them, they'll take it no matter who gives it to them. And right now, there's a movement in England, just a day after the Brexit election, to have a revote. They want to change this. And one concern I have is, this has happened before in Europe, is they make them vote until they get the right response. So I'm not saying that I'm predicting there would be another vote, but the vote was 52 to 48. More likely what's going to happen, it wasn't like it was a recall situation where the vote was 50-50 and they would claim, well, it wouldn't be fair, to pull the whole country out because only 50% and a small majority wanted to go out. But it looks like more likely what will happen is Scotland will have a referendum to try to get out. Now, they just had one in 2014 and it didn't pass. They decided to stay in England. But now what will probably happen is they'll have the referendum, they'll move out, and then they'll try to do their own treaty to join up with the EU. We'll see how that works. Of course, the Fed the next day was out there yakking how they're monitoring the situation and they'll provide liquidity and all of that. The EU made similar statements, how they respect the decision, but they'll do whatever it takes to stabilize the situation. To wrap up, there were some good gold coin finds this week in Pompeii and also in Devon, England. You can click on the links and check out the pictures there. The mint sales we've talked about. Here's one before we close off is I did a blog post, Gold as Insurance. I also kind of took a swipe at this Barry Ritholtz guy who mentioned that he does not like gold because in effect it's a bet against human ingenuity. And my counter to that is it's not a bet against human ingenuity, it's a hedge against human stupidity. You can bet on human ingenuity by buying stocks, and you can own stocks and gold. They're not mutually exclusive. But we do know no matter how much humans have ingenuity, They mess up from time to time. And when they do, there's devastating consequences. And since gold doesn't make mistakes, that's the reason to own gold. But in any event, for people that were in Britain who knew about this Brexit vote and were told the disaster it would be, they were foolish not to buy gold as portfolio insurance, because if you look back in early January, the price per pound, per ounce of gold in the pounds was about 715 pounds. Well, after the Brexit vote, it's about 960. It's up 34%. And that just highlights that gold is insurance. Let people decide that it's not, or that somehow you're betting against humanity. Well, okay, you just lost the value of your pounds. You had your portfolio wiped out yesterday because you have some philosophical reason that you don't want to bet against humanity. That never made any sense to me. Still doesn't. In any event, we covered this earlier about how the people are protesting about not being pulled out of the EU against their will. I think it's all a lot of nonsense. The vote, that's how democracy votes. If you don't like it, first of all, if people don't want to be in England, that's not part of the euro, well, Britain is still part of Europe. Just because they voted, that nothing has changed. So all these people who want to be part of Europe, they can go to Europe. They still can go to Europe. They can stay there if they want. They can apply to be European citizens under whatever country they move to, and then they're done. So it's really an emotional issue, and I understand if you philosophically believe that you want to be in Europe, but you still are in Europe. The government of the EU has nothing to do with whether you as a British person or you as a French person want to consider yourself European or not. It only has to do with whether you accept that a body out of Brussels, an unelected body of bureaucrats, can tell you what to do for the privilege of being able to say you're European. I don't know why you need to grant the EU that status to give you the right to say you're European, to give you the right to travel among different countries and enjoy Europe. But the young people have been taught that entity is somehow their savior. And interesting, the older people, they realize as a group that's not true at all, that the EU hasn't given us anything that we didn't already have. Anyway, that's it for us this week. Please subscribe to Smaulgld, subscribe to this YouTube channel, and subscribe to smaulgld.com, and we'll talk to you next week. Thanks. Bye.